Stocks had a big move this week, and now it's important to think about what could happen next and how to get prepared. Because, oh boy, was it one of those weeks. Well, it's not all that complicated. All we're looking for is a two-step recipe. So far, we got number one. We're going to come back and talk about number two a little bit later in the show. But to make it really simple, people are not really as worried as they were only a week ago. The VIX is down by 63%, right back down to 20, a normal reading where the market is calm, cool, collected. But fear and greed is actually lower from 27 down to 24. That will be important for us to push over into 25 plus if the rebound is real. If it's not just a bounce. When we look here to the heat map, yeah, there's some pockets of green like Eli Lilly, Meta, Costco, a little bit of chips, but it's very mixed. And we have important data coming out next week. Notably, CPI is supposed to come down to 2.9. Hey, that looks like the job's done for the Fed. Time to start cutting, boys. And that's what they've been talking about. How much they're going to cut, not if they will cut. So the data coming out next week, because I will be gone until Thursday of next week, Wednesday or Thursday of next week. PPI on Tuesday, that should be bullish, right? Down to 0.1. Market is very sensitive. Good data should be good. And then as we look here to Wednesday, we got CPI coming up on a core and month over month, but on the year over year coming back down to 2.9. That's really good. And then jobless claims on Friday. So if the job is done, there's a very simple recipe we want to follow. Let's look at that right now to make it really simple. So a fail breakdown. All that means is that we sold off this week, but we managed to close back above the previous candle low. That's last week's low. That's found here at 528.6. So far, we got number one, fail breakdown intact. Now, next week, all we need to do is close above 534.52, which is this week's high. That would be an expansion signal. That on the weekly chart for me would say that the head and shoulders is no longer really valid because we're now back above that key neckline. The really important part for continuation is not just that we get an expansion signal, but we want to basically see the same recipe now on the monthly chart. So what would that mean? Well, it would mean that we need to get back above 537. That's last month's low. It's 537.45 to be precise. So if a bottoming pattern, let's actually go here to SPX because we have our notes. A bottoming pattern, a potential bottoming pattern is going to be a failed breakdown. That's a bottoming pattern though. If we want stocks to go back up after the failed breakdown, we need to see an expansion signal, not just defense. The bulls have to play defense and offense. So going back here to SPY, this is really important because some charts don't actually have failed breakdowns. We'll look at that in a minute. So first of all, failed breakdown, that's what we have this week. That's past. The expansion signal just means closing basically at 535 next week. And then we have to get to 538 and hold that into the end of the month. It's only August 9th. There is a lot of time left. But let me just remind you of where we started versus where we are. Because what I asked people was, is it 2000? Is it 2008? Or is it 2020 or 1995? Because as we look here to the VIX, in 2008, global financial crisis. What happened in 2020? Global lockdown. This time it was Japan. So Japan was a large part of it, right? Geopolitical tension, Warren Buffett selling Apple, AI bust, NVIDIA talking about delaying their chips, and all this other stuff. So there was in summer, right? Low volume summer. So that's what caused this massive spike. And that's the reason why I think about if this time is really different and the VIX is now down by 63, it means people rush to buy insurance. Now they have it. They don't need more. And I don't see anything global, systemic, like we had in 2008 or here in 2020. The fears of a recession, I believe, are overblown. We're even seeing GDP revisions, according to the St. Louis Fed, up to 2.9. So 2.7, 2.6, reaccelerating. Good data should be good. This is not recessionary data. So just before we go further, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel. Thank you very much ahead of time. So if people are worried and they now understand that everyone rushed to buy insurance and now the VIX back down to 20, that's a normal reading. So this time might be different. It might be 1995. But what's really important is that the market has built itself a very nice staircase of support. The uptrend held. We got a perfect gap down pump up. And if we look at the volume, yeah, lots of people got washed out. That's excellent. We look here to the NASDAQ, basically the same thing. Right back here to the neckline. Look at that. Shoulder, head, shoulder. So if we look for that same fail breakdown pattern, we have that here. That's number one. Number two is we want to close over the previous candle high. So for QQQ, same thing here with the volume, right? Ramping up. So it might be over. If it's going to be, and we're going to get that close over the candle high next week, that basically means we want to be above 452.06. Let's call it 453. That would start to invalidate the head and shoulders, just like we were looking for on SPY. And then if we look here to our monthly chart, we have to make it above 455. We'll call it's 455. So 455 for the monthly chart, 453 for the weekly, and basically the same thing for the S&P. We now want to repeat that same bottoming pattern. Let's go to here on SPY, where we want to print. This is what the bears want to see. So we talked about the bulls. For the bears, we printed the lower low. You guys definitely got that one. Number two, they have to close us below 537. That would be a breakdown, not a failed breakdown. Here's a breakdown right here. So we technically close back above the candle high, but it's a bearish engulfing. That leads to a leg lower. That could be different than like this time right here, where it's a one and done. There's no pattern with just one candle. So what do we need to see? A succession of candles or more than one. So to get all the way through to the bear case, we have to wait all the way till the end of September. And we're looking at the same weekly chart for the bulls and bears. If we're pointing up, it's bullish. If we stop going up, it's bearish. So the bears are going to have to knock us below this current weekly level, and that would get the momentum back in their favor. If we now look at a few more charts, just to make sure we understand where we came from versus where we're going, look at SMH, it's up by 3% on the week. Yeah. Look at MAGS, flat. The failed breakdown here for XLG, right? We're back above the previous candle high, and we're basically flat, 11 cents down. RSPT, or equal weight, the NASDAQ, green on the week. Nice. We look here to RSP, failed breakdown, flat on the week. IWM, breakdown. It's not a failed breakdown. It's just a breakdown. Closing at the candle high, so it should be able to keep going higher, but that's a breakdown. Dow Jones, failed breakdown. ES, failed breakdown. Let's look at a few more quick charts because I want you to see that this is basically the theme for a lot of stocks. Apple, we're looking for 215.75. We closed at 216. Yeah, we got it. Apple did it. Even Apple did it. Microsoft, failed breakdown. Failed breakdown. NVIDIA. Google, breakdown. Really close, though, just like the Russell. Amazon, back above here. The second thing I want to note is that a lot of charts were struggling with the 50 DMA. RSP, that's back above now. That's equal weight. Dow Jones closing back above its 50 DMA. The Russell, not back above. So when we look at daily charts, we look at weekly charts, a lot of these are giving us similar clues. If all we do is look at the S&P and the NASDAQ, yes, that's a really good slice of the data. But we want to remind ourselves that a lot of other charts still have to do similar price action on these monthlies. So if we look here to just a couple, let me actually show you one impressive chart here. Oh my God, right? EWZ. Whoa. You want to see what an ETF can do? Wow. Bullish engulfing candle up by 7%. Woof. All right. What a move. What a stud. Look at China. Fail breakdown, green on the week. Emerging markets, or EEM. Same thing. Fail breakdown, 1% on the week. How about India? Yeah, breakdown. So that one's a little bit more extended. But for the most part, like even Mexico here, fail breakdown. So daily 50 DMAs, that's really important, right? A lot of these are still not back above. But for the broader market, S&P, NASDAQ, these tech stocks, we're making progress here. And because we're going to be closing out weekly candles before monthly ones, we want to make sure we pay attention to all of these different time frames. So with that said, this video should be short. It should be sweet. You should know exactly what to look for. We want to be back above 538 for the S&P at end of next week. That's the ideal scenario. For the NASDAQ, it's back above 455. With that said, watch the video on the left or subscribe on the right, and I'll see you guys on Thursday morning at 9:15 a.m. Thanks so much.